When wealth is held personally across different countries, succession and control can become difficult to manage. A Seychelles foundation creates a separate legal structure above those assets. So ownership, governance, and continuity are handled through written rules rather than personal ownership alone. My name is Shiraz Waheed from Lepidus Wealth, and in this video, I'm going to explain what a Seychelles foundation is, how it works, why families use it, how control is structured, and how it compares with other structures. A Seychelles foundation is a legal entity created under the Seychelles Foundation Act. It is usually used to hold assets for beneficiaries for a defined purpose or for both. In simple terms, it is a structure that can own assets and operate through written rules. Unlike a company, a foundation does not have shareholders. There is no capital and no owners in the normal corporate sense. The founder creates the foundation and can transfer assets into it. Once assets are properly transferred, the foundation becomes the legal owner. This is the key difference between personal ownership and foundation ownership. When assets are held personally, they remain connected to the individual. When assets are held by a foundation, ownership sits inside a separate legal structure, and control is exercised through governance rules. Because the foundation can continue even if the founder dies or become unable to act, it can support succession planning. Local inheritance tax, probate, and reporting rules still need to be reviewed separately. A Seychelles foundation can hold shares in companies, investment portfolios, intellectual property, and other rights. In practice, it may also own holding companies underneath it. A Seychelles foundation is usually considered when personal ownership is no longer efficient for long-term planning. This can happen when a family has assets in more than one country, when succession needs to be managed across generations, or when a founder wants a control structure that continues after their life. One common use for foundation is succession planning. If assets are owned personally, succession may depend on probate, local inheritance rules, and separate procedures in each country where assets are located. A foundation can create central ownership layer so assets are held under one governance framework. Another use of a foundation is asset segregation. If a business owner holds operating companies, investment assets, and family wealth directly, everything may be exposed at the personal level. A foundation can help separate family ownership from personal ownership, provided it is created at the right time for the right reasons and with proper documentation. A foundation can also help with continuity. In a family business or investment structure, the concern is often who controls decisions, who can replace decision makers, and how distribution should be handled. These points can be addressed in the foundation's documents before a problem arises. It usually fits where the family needs a flexible offshore foundation structure and where the bank's assets, tax position, and counterparties can support that choice. Now, when it comes to the roles involved in a foundation, the first person is the founder. The founder establishes the foundation and usually defines its purpose, beneficiaries, governance rules, and initial assets. The founder may also reserve certain powers, depending on how documents are drafted. The second party is the foundation's council. The council manages the foundation and makes decisions according to the charter and regulations. It does not own the asset personally, but it controls how the foundation acts. The third party is usually the registered agent. A Seychelles foundation must have a registered agent in Seychelles. The agent maintains the registered office, support filings, and assists with ongoing compliance. There may also be a protector. The protector is often used when the founder wants an additional control layer above the council. For example, the protector may approve major decisions such as changing beneficiaries, selling important assets, replacing council members, or changing the foundation rules. Then there are beneficiaries. These are people, family members, charities, or classes of persons who may benefit from the foundation. Their rights must be drafted carefully because wording can affect control, disclosure, tax treatment, and expectations. Many founders want a foundation because they want succession planning and asset protection, but they also want to keep control. The challenge is that too much retained control can weaken the foundation. If the founder keeps full control over every decision, bank relationships, and tax authorities, the courts may question whether the foundation is genuinely separate. This is where careful documentation matters. The founder or protector may keep approval rights over major decisions, while the council manages ordinary administration. For example, selling of major assets, beneficiary changes, or council replacement may require approval, but the foundation should still operate through proper resolution and records. For asset protection, timing and intent are critical. If foundation is created while the founder is solvent, before any known dispute or a legitimate succession or holding purpose, it is easier to support. If assets are moved into the foundation after a claim has appeared or with the intention of avoiding known creditors, the structure can be challenged. For succession planning, the benefit is continuity. The foundation can continue after the founder's death. The council can continue to manage assets. Beneficiaries can be provided for under the foundation rules. This can reduce disruption compared with assets held directly legally under the founder's personal name. The foundation does not remove the need to consider local law. If assets are connected to countries with forced heirship rules, estate tax, inheritance tax, or reporting obligations, those rules must be reviewed separately. Domicile, residency, citizenship, asset location, and management control can all affect the end results. Now, when it comes to banking, a Seychelles foundation may be valid legally, but banks will still need to understand it. They will usually ask for the charter, regulations, certificate of registration, council details, and beneficiary information, as well as source of wealth, source of funds, and tax residency information. They may also ask why the foundation is being used. A clear explanation may be that succession planning, family governance, and holding company control is required. A weak explanation, on the other hand, creates delays and sometimes banking rejections. Offshore structures are no longer accepted simply because they are registered. Banks and service providers expect transparency. They want to know who is behind the structure, where the wealth comes from, who can benefit, and who controls the decisions. Ongoing compliance is also important. The foundation must maintain records, keep proper accounting information where required, and update the registered agent, as well as comply with beneficial ownership and anti-money laundering rules. A foundation should be treated as an ongoing wealth structure, not as a one-time setup. A Seychelles foundation is one option within a wider structuring toolkit. DIFC and ADGM foundations are often used where the family wants a UAE-based structure, stronger regional recognition in the Middle East, and a connection to regulated financial center. They can be relevant for UAE residents, regional assets, and institutional governance. A Seychelles foundation, on the other hand, may be more suitable where families want an offshore foundation structure and where the asset plan, banking requirements, and tax analysis support that jurisdiction. It can be flexible, but it needs coordination with the rest of the structure. Now, when comparing Seychelles Foundation with a trust works differently. In a trust, legal ownership is usually held by the trustees for the benefit of the beneficiaries. In a foundation, the structure itself is the legal entity with its own personality. Some families prefer foundations because they feel more familiar than trusts, especially where clients come from civil law backgrounds. An offshore company has shareholders, directors, and shares. It can hold assets, but it does not provide the same succession framework unless the shares are held through another structure. This is why a foundation may sit above an offshore company. The company holds the assets and the foundation controls the company shares. Before using a Seychelles foundation, you should start with asset mapping. You need to know what the foundation will hold directly or indirectly. The founder, the council, the protector, and beneficiaries should be defined clearly. Replacement rules should also be included, so the structure can continue if a council member resigns, dies, or become unsuitable. Tax and reporting also needs attention. A foundation does not automatically solve inheritance tax, income tax, capital gains tax, or forced heirship rules. These depends on jurisdictions connected to the founder, the beneficiaries, the asset, and the management. A Seychelles foundation can be useful for international succession, asset holding, and governance, but it should be built around the asset plan. The strength of the structure comes from proper design, clean documentation, compliant administration, and coordination with the jurisdictions where the founder, beneficiaries, banks, and assets are connected. So if you are considering a Seychelles foundation, or you want to compare it with other jurisdictions such as a DIFC or an ADGM foundation or a trust structure, you can request a personalized asset protection plan by clicking the link in the description below. That's it for today, and I will see you in the next video.